Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is June the 11th, 2019. All right, we're going to kick things off with the economic data that's coming out today, and we will have the PPI, the Producer Price Index, which will come out 8:30 a.m. Eastern Standard Time, and that will show the amount of inflation at the producer level. Then I believe it's tomorrow we get the CPI, the Consumer Price Index, and we'll see there if there is inflation at the PPI level, producer level, is that filtering through to the CPI? These are government numbers, folks, and they lie. We all know when we go to the supermarket, there's shrinkflation, the pound of coffee, or I should say the 12 ounces of coffee that you got last month for $3 is now 11 ounces this month for $3.10, but they keep it in the same container. The signs of inflation are everywhere, yet the federal government will not acknowledge it, and they are going to go back to the printing presses yet again as soon as July. So let's kick things off with first, we'll talk about the pre-market activity, then we'll segue over into a couple of stocks that are floating around in the forum that our members are curious about. So let's get to it. We're going to kick things off with the NASDAQ. They're spiking higher this morning. We're up over a half percentage point. No new daily high yet. Remember that yesterday we did close well off the highs of the day. So are we going to double top out here, or are we going to break out? I was talking with members last night on Market Wrap, which is posted in the members area, about why I did not short this market into resistance yesterday. I was looking at the price of copper. Let's take a look at it. Here is copper on a daily basis. You can see it's up over 3/4 of a percentage point this morning, but last night we were talking about it on Market Wrap. Here's a daily chart. We are breaking out. In fact, I posted on StockTwits last night, are we ready for a short squeeze in copper? June the 10th. And here was the chart I posted. So this morning, going to a 4-hour chart, we are ripping higher. Why am I talking about copper? Copper, or as they call it, Dr. Copper, is a signal of economic growth. It's used in building materials. Now, I believe the logic for the rally in copper to be the anticipation of Federal Reserve rate cuts and then quantitative easing, a return to cheap money, the printing presses, and that will fuel the economy. In the short term, absent the Federal Reserve's involvement in this economy, the stock market, the economy is simply unsustainable. It cannot sustain itself. It needs cheap money. Traders are junkies. They need the injection of easy money to keep the party going. Absent that cheap money, the music stops. And this game of musical chairs, once it does stop, is not going to be pretty. So you really need to get ready to identify when it's time to short this market. But as it stands right now, I'm reluctant to go shorting this market in anticipation of the Federal Reserve and their highly expected rate cuts. Back to the indexes. We'll go to the S&P 500. We are flirting, this is still a 4-hour chart, all 4-hour charts. We are flirting with a breakout this morning, and we're very close to yesterday's highs. We were rejected at the 2,900 level. We are at current at 2898.75. I will point out that we are putting in lower highs on RSI, and in fact, lower lows as well. So while we have strong pre-market activity up nearly 1/3 of a percentage point this morning, RSI is signaling that all may not be as what it seems. Now, if we rally and we close above 2,900, and especially if we get a new daily high and we close on a 4-hour basis above this upper band of resistance, well, then the party lingers on, and we will probably press higher up into new resistance levels. So be very, very careful in advance of next week's Federal Reserve meeting of shorting this market too quickly. It may be best to short the news. Moving on to the U.S. dollar. The dollar was lower this morning, but it did rally back. And this last 4-hour bar, which closed at 5 a.m. or 4:59 a.m., and this new 4-hour bar, which opened up at 5 a.m., we're seeing some sign of support below. We are at current struggling to hold this lower band of support, but I believe that after this bullish reversal bar, this last 4-hour bar, in all probability, we're going to see a bid underneath the U.S. dollar through to at least the end of the trading day. When they go to cut rates, it's going to be very, very difficult for the dollar to rally. You had Mario Draghi out of the ECB yesterday coming out saying he wants to cut rates. I mean, by how much? I mean, this is kick the can down the road. Mario, he's been saying that he wants to raise rates for years, and he never does. All he does is cut. I digress. So what you have is a race to the bottom for currencies. That's what Mario was doing yesterday. He doesn't want the dollar dropping because that'll hurt exports out of the European Union. So I believe that's why you're seeing a bid under the U.S. dollar. I think that bid is going to be brief. Taking a look at commodities that trade counter to the U.S. dollar, gold. We were up when I went to bed last night around $3 per share. And I mentioned over the weekend on the week ahead commentary with members and even on best stock charts, which I'll link to at the end of this video, that I expected a pullback in gold. I expected a pullback in the gold miners. I expected a pullback in silver. We got all three. Now, I was tempted yesterday to go adding to our gold mining trade, but I was reluctant. And I said, you know what? You saw a spike higher in yields. You're seeing money flows into the stock market. When the stock market is moving up higher, people want to own Google, Amazon, Facebook. They don't want to own gold, silver. So I said, you know what? Let's take a disciplined approach. We had a price target on what we own right now, which is the NUGT. Those are the gold miners, the leveraged ETF. We have a price target. We're going to wait for that price target. And you could see that yesterday on this 4-hour chart, we had a dead cat bounce. And then overnight, we broke the lower band of support. Now, what I see setting up here, potentially, not guaranteed, but potentially, is a head and shoulders setup on this 4-hour chart. Left shoulder, head, right shoulder. Here's the neckline. Let's highlight it. And there you have it in red. Let's take a look at silver. Okay, silver, it's showing is up this morning, but we did break down. I don't know how this is possible. We did break down below this lower band of support. We closed at 14.69 the ounce. Yeah, we're at 14.66. I don't know why it's showing this positive. Anyway, we are down versus this last 4-hour bar. We're down versus yesterday's close. And we are down below this lower band of support. So we're seeing some pressure on silver technically. But folks, this is going to be an opportunity to back up the truck, probably for the last time, on gold and silver. Let's take a look at oil. We'll go with the Brent price. All right, so oil is down this morning, but we do appear to be putting in higher lows and holding that support. Now, you would think that if we had an anticipation of economic expansion, as noted by the price of copper this morning and its daily breakout, you would expect that energy should be in demand as well. So my guess is that we will see strength on the price of oil and the energy sector in the coming days. We'll leave off the pre-market activity with Bitcoin, and then we'll segue over into TrendSpider, and we'll take a look at some charts for our members. All right, so Bitcoin this morning down 20 bucks, flirting with that 8,000 level. Not much going on here. We did book profits on Bitcoin a couple of weeks ago. We bought back in, what was it, on Friday, thereabouts, at a significantly lower price than where we sold, and now we're looking for another move higher. We are in an orderly consolidation on Bitcoin. There is a threat of a head and shoulders setup here, left shoulder, head, right shoulder. Here's your 45-degree neckline on Bitcoin at the 74.94 level. So I would keep an eye on that level, because if that breaks, we're coming down here probably around 7,100. So warning flag on the track for Bitcoin. We do have the Bollingers, which are tightening. So I wouldn't go selling my Bitcoin right now, because the path of least resistance remains higher. I like the tightening Bollinger Bands, but if we break this neckline here, we're going lower. So just watch that 74.94 level. All right, so this is the inside of our forum, and one of our members, Barun, Bob, thanks to a previous membership in an investing newsletter, I am stuck holding a bunch of SLB at an average price of $45 per share. Let's write that down. This has been a real dog, but it seems that 35 can be good support. What is your suggestion here? All right, so I can't provide suggestions, but I can provide an opinion. So let's take a look at the chart. All right, so what we want to do is take a look at Schlumberger on a weekly basis and get a feel for how it's looking. We have taken out prior lows. Obviously, the path of least resistance is to the downside. The question is, do we have support below? And this is the beauty of TrendSpider. Click a button, and you can see that we do have support below at around $35 per share. We closed yesterday out at $35.60. So we may have some support below. However, if that breaks, we're probably coming down here to this other lower band of support at the $30 per share level. So I would tread with caution here. And when you overlay, let's take off we're going to stay on a weekly chart, but we're going to remove the weekly trend lines, and we're going to overlay monthly trend lines to identify potential support below. And there isn't much until you get down here into the mid-20s. So you need to be really, really careful with Schlumberger and respect your stop-loss order. Now, on a daily chart, you can see that yesterday we flashed a reversal day, but let's overlay the weekly trend lines on this chart, and there you have it. Again, there's your weekly support as noted in dashed line, not solid line. When you're on a daily chart and you're using a weekly overlay, those trend lines will appear in dashed line. If you're on a weekly chart primary and you overlay monthly, the monthly support levels and resistance levels will appear in dashed line, not solid. So we are flirting with a support level. So yes, I would agree that we do have support in the neighborhood of $35 per share. Now, what I want to do is I want to overlay what I'm becoming accustomed to, which is range up chart patterns. And I was introduced to this through TrendSpider. We're going to update our chart here. And what I want to point out is that while up here are the candlesticks, right? Candlesticks. Here are raindrop candlesticks, and they use VWAP. So these are volume-weighted candlesticks. We'll talk about that more in the future. But on the 6th, I want to point this out, where we had we closed off the lows of the day, but we did close off the highs of the day as well. So it wasn't a chart pattern that would get you all excited. However, when you take a look at the 6th using raindrop charting, you could see that the VWAP, let's expand this out. The VWAP appeared in blue. This is a sign of indecision, which is consistent with a doji formation or a filled candlestick at the lower end of a trading range. Pay some attention because something's happening there. And this is something that the standard candlesticks wouldn't have picked up. So this is just another tool in our toolbox so that we have an edge over other traders, and just a really great value-added feature of TrendSpider. And if you're interested in them, click the link below. 25% off. CT25Z is the discount code. CT25Z. TrendSpider is also included with our silver and gold level memberships for members after March the 15th, 2019. All right. That is it for this morning, folks. Everybody have a profitable trading day, and I'll talk to you soon.